Record that, share screen. So I texted you guys about there's 23 lessons from profitable traders. This is actually an article from Jack Schwager, and it's been circulating on the internet for some reason. So, but nevertheless, this is what we're discussing last night. It was hang on a second, guys. My internet apparently is not stable. Just 1 second. Let me see what happened there. Just bear with me, please. Okay, that's better. So we were talking here about last night about methods. So the method should suit your personality. So that's also a really good example from your case, Damir, that perhaps dealing with daily time frames will be smaller positions.
Yep.
And then stick to your 1 hour, 4 hours. That basically works for you very well, right? At the end of the day, the thing about the markets lately is that it's been very volatile, jumpy, doesn't make any sense. Talking about euro, because I was also in the euro, and of course it took my stop as well. With what's been happening globally, about Trump, the tariffs. So that basically led everything, because everything right here was really good. And then it did fail, came back again. So these are all news-based. And I guess it couldn't hold it anymore because this is really powerful. This is strong demand right there. If you notice, after actually our discussion last night, around 10 or 11 o'clock, something like that, 11 something, there was a report, and boom, it just basically, it wasn't even a report. Something was being said. Yeah, here. Midnight 0100. 11, 10, 10, 9, 10, 11, 12, 1. Yeah. 10 o'clock, it just went, it just basically tanked so quickly. It was so interesting. So they were definitely pushing the price to the downside. They wanted to push a price. It was based on news, right? So at the end of the day, we don't have any full control. Well, we can have control, which is here, number 2. You can't control what the market does, but you can control your reaction to the market based on number 2. Yeah, we definitely don't have control, but we can control only what we control based on risk management. So I believe that leads now to number 3, that to be a winner, you need to be willing to take a loss. So we have established that whatever positions you may have all the way to the stop loss, are you okay to risk that amount? If yes, then awesome. If no, it's a very simple programming technique, right? It's a program. It's an if and then statement. If you're happy, then leave it. If you're not happy with the loss, then don't trade it. Close it. So that's the only two things. So I believe, based on that if and then statement, what's connected on that one is the sincerity and the pure honesty of oneself to really accept the loss. Because if you do accept it in pure honesty, then technically there's no regret, right? Technically, if you're really purely honest, you get stopped out, are you okay with it? If you say you are, then so be it. But if not, then this is where the regret happens. So I also believe there are two parts of the human psyche. The conscious part, and of course the subconscious part. The conscious part is being driven by ego, that even we say that we are honest, but deep down inside we are not really honest. So the honesty will really come into place from a subconscious, from a being space, rather than the conscious space that will lead to regret. You know, where sometimes people they just want to say something, or they just smile for the sake of smiling, just to be nice, but deep down inside they're not really honest by saying something to the other person. So, and you can see that from some people sometimes. What do they call that? Being fake. And I guess that's why I don't really have much friends, is because sometimes I'm too blunt. I just tell people the way they are, the way it is, even if they don't like it. At the end of the day, it is what it is, right? I would rather be honest and tell the person up front rather than being fake and not say anything to the other person. I mean, it's just me. So I believe that if we have to be honest within ourselves too, that if someone also tells something about me, then I have to go like, okay, all right, he or she sees something, then what would that be? So how can I change that then? So I believe the sincerity, that when you're trading, that risk, to accept that pure risk, that you're really going to be okay with that. Because remember, your personality has to be in sync with everything. So where successful traders use trading methods that suit their personality, in my opinion, the personality is in synchronicity as well with the risk management part. And then where it leads to number 4, where hope should never be in your vocabulary. So that's what we spoke last night, the hoping. Hoping that the price will come back up, but in reality, maybe it's not any longer. So in hindsight, yes, this was already broken based on this primary uptrend. Came back down though, created a new higher low once again that touched the former primary that became secondary, which is not a primary. And yesterday broke the primary and hence breakout. So that's me too. I saw these already yesterday, but I was hoping that this will hold. And I teach breakouts. This is a classic breakout from a trend, from a demand, and then so at least, thank goodness, the stop loss that I have the stop in order to hold it rather than getting stop over here where that's another extra, well, that's 100 pips to the downside. Okay, so stop losses are always important. There's one here. 18, contain your losses. And number 17, being wrong is acceptable, but staying wrong is totally unacceptable. So that is something as well that I'll always keep on working on, that staying wrong is definitely not acceptable, because that is definitely now connected to righteousness. And this is also something I keep on working on too, is not to be right. Righteousness, hoping that it will go up, being right that, hey, based on my own perception, it's still going to go up, even though the market will do whatever it wants to do and doesn't really care about our own perception and our own opinion. Okay, so for me, it's to keep on working on this, because that also gives me into trouble. Right? Oops, where'd it go? Then to number 4, if you are on a losing streak, reduce your position size. Since this is a major loss for me with this trade, it's also been a long time, since June. So I'll have to start from scratch once again and to create another plan and to reduce basically my position. Number 6, don't underestimate the time it takes to succeed as a trader. Definitely time is a factor. So, but mainly it's the learnings. That's why people keep asking is like, why does your program take so long? Well, being a black belt doesn't happen overnight. Being a successful trader doesn't take overnight. It takes a lot of practice, a lot of live trading, a lot of hours. And hence, that's why those, for me, the TCLs, the trading checklists, are really important, because it keeps you in check to get your emotional, your head right, and then to see whether if everything is still in synchronicity, or the plan is still into place. But if it's no longer into play, then we're going to get rid of it. All right, which leads to number 7, that trading is a business. It's a profession, it's a vocation, not a hobby. I know that everybody in this room would take it seriously, and I can really tell in terms of your commitment and desire to be in there by giving your homework, practicing, the amount of hours that you do put in, which leads now to number 8, by having a business and trading plan. So the plan is always important. Oh yeah, here, see, which number 9 leads to being honest about your weakness and deal with it. So you need to find what your weaknesses are, be honest with those weaknesses, deal with it. You know what really irritates me is people who complain and don't take any action, or they don't deal with it. That's my, I think, number 1 defeat, or what do you call that word? When everybody has their own irritation with something, you know, some will either talk loudly or eat nice and loud for me is that. People who complain and who whine. Um, that's why for even when I'm teaching kids, in my class, one of the rules is that no whining. If they whine, then they sit down and they don't play, they don't do the class. If they whine, then they have to learn how to express themselves, to take action, and see why they're whining. So trading, same thing. There's no point in whining. Is simply just deal with what happened. What are you going to do with it? How are you going to deal with it? What's the solution for it? And move on to the next one. Right. So that's, in my opinion, an important element. Funny enough, when I was reading Principles by Ray Dalio, there's one part of his principles based the same thing. So rather than complaining, find a solution for it. So I believe it's a better, it's not a waste of energy, right? So yeah, find your weaknesses, deal with those weaknesses, and then move on. Number 10. Oh yeah, and the other one, my piffy. There you go, that's the word. The other one is simply they will not take full responsibility. So they complain, they whine, and they don't take responsibility. Instead, they blame others. In my opinion, that's not a good trait, because at the end of the day, we all have choices, and we have to take responsibility with our own choices, and then to have an open mind, to open to feedback, and then really look into deeply what's really happening and see whether if the issue is really us or the outer factor. Okay, so for me to be irritated from others who are whining, I believe is because that if I do whine, I don't like to whine, and I just want to get over it and move towards what needs to done, that needs to be done. For me, I learned that from my coaches, and I think it's from the martial arts aspect. If you're hurting, what are you gonna do? You're gonna push. You're gonna keep pushing until it doesn't hurt anymore, basically. Okay, so that's pushing one's limitation. Number 10, know when to do nothing. So to do that, actually, it takes a lot of patience. Patience. So how can we learn from the Euro? Same thing, being patient. This was a lot of patience. Go up and down, account going up, account going down, account going up, account going down. Definitely in hindsight, taking profits when it's time to take profits, and then time to get out when it's really time to get out. Okay, but know when to do nothing is simply when it's dull period, it's not doing anything, and just leave it alone. And then to do something is that when there's clear direction, close the position, and then go to the opposite side. So that's also a good reference leg, that there's an offense, there's a defense. If the offensive move is no longer working, what will be your defense? What happens if your opponent is now attacking you and you need to learn to be in defensive mode? Hence, the defensive strategy would be to close and just to short. Right, because for me, trading is like competing, either stand up, fighting, or groundwork. That if I'm attacking and another person basically sweeps me and now I'm on the bottom, then I need to defend. So I have to change the strategy. So there's offense, there's defense. There's defense, there's offense. Because in here, when, watch this. If I put it through a bigger time frame, you can see it very clearly. See, consolidation, 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 uncertainty, uncertainty, uncertainty. They don't know where to go. And then last week was a clear picture. So technically, we're on a defensive mode. But it was leading to number 4, which is hope, and leading to righteousness as well. Which now leads to number 11. Being a great trader is a process. It's a race with no finish line. I heard that with one interview. I think it was Warren Buffett. I think he said the same thing, or was it with Ray Dalio? One of them. But anyway, said it's just a race with no finish line. You're not competing against anybody else. You're just competing about your own. So I never ever listen to other opinions. Make your own trading decisions. So in class, we create and we look at evidence, facts, and the end is to be objective, and that if you have, in terms of your own decision-making process and what works with your personality, then that is your own decision, part of your reasoning to make a choice whether to stay in, to close your positions, and so forth. Okay, number 13, analyze your past trades. Study what happened to the stocks or to your trades after you close the position. So definitely your homework for this weekend is to look at your performance this week, which I'm also going to do on my end, and see how could you make this trade a better trade. I believe for the euro, we already spoken. We already have a lot of good bullet points right there, because in hindsight, everything looks good. So just to follow the plan. When things are no longer have a clear direction, have a defensive strategy, and follow the defense rather than the offense, right? So things like that. Which leads now to number 15, where great traders continue to learn and adapt. So there's a lot of learning, definitely, for sure, and adaptation. Ray Dalio explains well about evolution. So market evolves all the time, it changes. So it rhymes, it doesn't repeat itself, but it evolves. And hence, that's why it rhymes. It goes up and down, up and down. So to be adaptable and to be with that. So in other words, if we're seeing this is to change the position, close the position, go with it. Okay. Which leads now to number 18, to contain your losses. Number 19, good traders manage the downside. They don't worry about the upside. So definitely what we're doing, which is we're happy, which I am happy for the past 8 weeks or so, or months that we've been dealing with the euro, is that we always keep on managing our downside. So I believe in every class, we always spoke about, okay, are we still okay with the stop loss? Can we add more because it still looks good? Or shall we not add more? Right? So things like that. Are we still okay that if we're going to add more, are we okay in terms of the risk? So, which I'm happy with that. We manage our downside. We weren't worried about our upside because it will come automatically if it did. But the thing was, we just didn't have any control about worldwide news that caused the dollar to go up, because the dollar index is definitely way overbought. It's ridiculous. There's no way, right? I believe it's just now that the markets, like the S&P, for example, finally tanked. So right there is right to look at it. Funny enough, by that option that I did, was up 30% because I got it at the good price yesterday. I was in here 10.8, 10.7, 10.8, and there was a gap. 13. I was even thinking even just a end of the month expiry, just for a quick one, but I'm going after the bigger one. I believe there's more room to go. It'll happen something like this. So I'm after the big kahuna. So the premium, yeah, it was like probably 30% now, 40%. So it was actually a good one. So, but nevertheless, things like that. I might have lost with the euro, but I gained with the hedging with the VIX. Okay. So that being said, Moving forward from there, Wall Street research reports will tend to be biased. So I don't look into that. I believe there's a lot of Reuters news that's more better reports than what you really read on Wall Street. So I don't read Wall Street. Which leads to 21. Knowing when to get out of a position is as important as when to get in. So hence this is why if you don't feel comfortable, always get out. I was comfortable with the stop loss. You're not comfortable no longer with the stop loss, close it. To excel, you have to put in hard work. See, there's really no easy way out in terms of success. The more hard work you put in, the better it is, which is why it shows in your results there, Demir. Okay, you put a lot of work into it. But it's better to have this lesson now rather than having a lesson or having this when you have a very big account, right? So you might see it as a loss, but you learn a lot from this one. This trade itself is priceless because you can't put value in terms of what you learn from this one. Better to do it now rather than having a $500,000 or $1 million account and then you're losing basically everything that you gained. If you mean, Damir?
Yes, I agree. Yep.
So likewise for you, Eric, whatever experience you're currently experiencing right now, take it and be happy with it because it's better that it's happening right now rather than later. That's in my own opinion. That's why every time there's if I have a loss, I made it into a habit to actually laugh at it and smile because rather than taking it too seriously. Because if I'm happy with it, then it means I learn a lot from it. So even in competitions, is why I compete in jiu-jitsu, and I don't really care about the medal. If I get a medal, great. But if not, it's mainly more for me is that if I lost in a competition, is I'm happy because I have to go home and I need to work on what I needed to work on. So those are the things that keeps me going. And last but not least, number 23, discipline, discipline, discipline. So to be in the space of discipline, though, it takes a lot of integrity to be disciplined. Integrity. Responsibility. I believe those are the two major values that equates discipline. For me anyway, and everybody's different. Because integrity for me means that if you say you're going to do, then make sure you do what you say, regardless of whatever happens. And then to take full responsibility with your own actions. Once you have that, then it will create the discipline, mainly a habit. Because discipline simply means a disciple being a student. In other words, being a learner. What are you going to learn from it? Great habits, then great results. Bad habits, because you can have the discipline too, but you might be creating a bad discipline. You know what I mean? So, yeah. Any questions based on what we've discussed today? I reckon there's a lot of good lessons in there. So if I were you, I would type in the 23 and maybe adding more if you have more. And then post it on your wall in your trading room as a form of a reminder. Or memorize those, put it into heart, and make those as your Bible, basically. Okay? Any questions? Eric, Demir.
No. Sunday, 5 p.m. is a new week.
Eric,
No, I'm good.
nice. Well, that being said, while we are at it, look at the S&P. So I believe it's coming. So notice, let me move this one right here. These are just basically my notes. This is the sign that if it finishes like this today, is what we call a gravestone doji. No one's willing to go beyond this high. This is the starting point of a lower high, unless Trump will say something once again, or the market will change as of next week to break through the high of this, which is 28.76.8. But if not, I started in terms of my short positions as of yesterday. This is the starting point. And if we have a clear cut of a clear lower high next week, the monthly, you'll see fit like this. And then if it creates a bearish candle, which is now going to create an evening star with a lower high, I have no doubt it's going to go lower compared to this low right there, 25, 29. You will go around to 27 and September. So 9/11, October, they're normally bearish months. You're going to see a lot of volatility, and the bears is happening. So then a start of a change of the bear market is going to happen, perhaps even all the way to 2020, 2021. How far it's going to go, who knows? It's too big. 1774.50 right here, 1774. That's the projected mark, only if a lower high will happen, of course. So yeah, in a span of 4 or 5 years, if the normal cycle happens. All right, so that's what we're going to see, which leads now to the VIX, where in my opinion, they are going to retest this big upper shadow right there. That could happen in 1 month, 2 months, 3 months, who knows, but it's going to get up in there. So very similar to what happened here. See, this is August. We are now in August. Now, there might be a spike in August or September. This is July, August, September. That's why I'm bullish with the VIX. Because the cheapest is basically buying an option with the VIX. Okay, so Dow, same thing. Dow is not as strong as the S&P. Notice right there, currently stagnating. And they're similar. This could be, this is way weaker. I'm bearish as well. Dollar index, definitely really powerful, created a new high for the year, I believe. Yes, breaking out new heights. This one is now a failure. Still no proper higher low though. How far it's gonna go, as far as I'm concerned, it can go all the way there. Another wave, and then lower high will happen. Okay, but it's very powerful. Can't ignore it. The month is just too strong. It's too far away from the 8 and 10. So 98 is the next one. So yeah, still bullish. Daily still bullish. Oil. Notice oil is up while the dollar index is majorly up. I believe this is just a correction. It's a good time for shorting as well, both Brent and crude oil. There's just on a corrective mode. And then gold is holding its ground. Good demand. Copper was powerful yesterday, and then it dropped. So currently it's also in a strong demand area. Funny thing enough, TYX is bearish, while the dollar index is bullish. Since the yield is currently leading, so the dollar index is going to follow suit as well, because it's just way overbought. So it's just a matter of time, once again, about and timing to go along with the euro. And so when the time comes. All right, so that's with the macros. We looked at euro. So after they're breaking out on the 115 area, basically tanked. This is just way oversold now too. Look at 4 hourly, daily, oversold. So in my opinion, stability, then correction is bound to happen. Weekly, same thing. They didn't even want to pursue all the way up. It's on the oversold section. Monthly oversold section. So I guess it's just a matter of time. And based on the fib, /50th percentile down to the 62, down to 111. There's more room for this to go through the 111, which is holding its course around here. So current price points, though, is currently being held by this there. Oops. Here. So it's within this range of demand. So 113.65, we're currently in a buying range again. So that's a big drop, 200 pips for the past 2 days. 345. Opposite way around. Targeting goals go 300 pips all the way up in there before it would drop. Didn't want to do it, unfortunately. All right, so that's with the euro. So nothing bearish. The M3 actually works well. Feeling the gap, and then continuation. 4 hours. Entry point was right there. Continuation. 1 hour. Entry point was right here.
So Reynaldo, I wouldn't have entered because of the demand, right? Even though it looked like it was an M3 on the daily, there was a strong demand zone, right?
Exactly.
And dollar index says it's supply. So now in the hindsight, yeah, of course, it's a perfect entry, but I expected it would bounce back based on everything that was happening.
That's where the defense strategy has to come into place, where once the low gets broken and demand becomes now supply, when there's a clear cut of a break, you have to get out. So a good example would be this one. But it was such a free fall, though, that they actually broke it. So buyers disappeared and sellers just went in really, really fast. Let me put in terms of 15 minutes. Yeah, see, even in 15 minutes, it happened within that 15 minutes. Let's go through 1 minute. Let's see, I could find it. Yeah, is that report that happened at 10 o'clock that it didn't actually, there's no report, but there was a news that came out in Europe when lira dropped because of uncertainty with the euro, something like that. It happened so fast. So when that happens, you just have to, when your position is closed, then you have to sell it. But it's good to know, though, that someone already knew ahead of time, and this is where the moving averages work so well. So someone knew before even the big drop right there. Those are institutional traders who work at the banks and they're monitoring certain news. Based on 1 hour, see right this one. All of a sudden there is a big momentum. What do they know that we didn't know? That's why you're not monitoring this. That's your sign right there. Maybe perhaps they already know something even here, even the day before. Maybe someone you already knew from there. Right? Because if there's a buyer, definitely there's a seller. Those sellers are, that's why these momentums, these forceful candles are always important to keep an eye on. Why such a big drop? Yeah, those ones always never fail. All right, so that's with the euro. Let's look at the pound. Pound as well has been battered a lot. Look at that. 1, 2, 3, 4, 5, 6, 1 week from Friday to Friday. How far is this gonna go? Question is, how far is the rabbit hole? 400 pips. Or how deep is the rabbit hole? Goes all the way down there. I believe the next drop is all the way down here. 125.967. Which they also have to support this 127 flat. So could be an opportunity for buying pretty shortly. We have to get rid of that one. Definitely very bearish. Staying away from there. Daily time frame is still bearish. Oops, sorry. I'm gonna move this to daily. Nothing. 1 hour. Nothing. Too strong. Dollar yen. You know, it's interesting about the dollar against the Japanese yen. The dollar is weak against the Japanese yen. So has more room to go to 110.30. So the yens are stronger than the majors at this point. Still also bearish, but it's on demand. You don't want to short a demand, right? So better to stay away. You know what's interesting? Your dollar Swiss, the dollar is so strong that the dollar against the Swiss franc is not strong. So Swiss is holding its ground, really because of gold. If you look at the weekly, see, in actual fact, because of this, it's better to short than to go long. Low risk, high probability. Nothing for the daily. For hourly, see, they're not doing anything. It's just consolidating. So daily is the same thing. Right. Aussie against the US dollar. Tanked earlier because of the dollar itself. Currently in a bearish mode, breaking out. So the question is, how far is this gonna go? Because it broke really strong demand. Next price is 71. Time to go. Stay in Europe, Demir, because the dollar is stronger.
Yeah, yep.
You should fly back. You should fly to Australia next. Cheap.
Right? Yeah, I can only carry 10 grand on me. Otherwise, red flags go up.
while you're in there. Right, so that's okay. Bring less than 10 grand then.
All right, and make more. Yeah.
So bearish with Aussie, bearish with the 4 hours, bearish with the 1 hour. 1 hour is back in demand, so really nothing. Please don't trade anymore on the 1 hourly. Dollar CAD currently in a correction mode. Finally, this actually came up back in the supply.
That's Saudis messing with it, right?
I'm sorry?
So Saudis are selling off all their CAD assets.
Yeah, I think the Canada and Saudi Arabia are not doing well within the relationship, I don't think. But so Canadian dollar is dropping. But here's an entry. There's an entry with the dollar against the CAD. Better though if it corrects itself a little bit, if it can drop down back to 31, and that will be a good price of buying. But definitely bullish with the dollar against the CAD, and then waiting for the price to settle, to come back down to demand in order to get a better price. Weekly, definitely strong. Easily can go up here to the high 33.87. So that's about 240 pips to the upside. Can it go to 35? I believe so. Okay, Kiwi, this one tanked as well. Broke through a good area of demand. No go. Next one is this low, 64.32, all the way to 63.43. Okay. Too powerful. Bearish. Euro yen. Wow, the yen basically tanked. Eesh. Nice entry. Exits. So back down here to the low, 124.63. Okay. 4 hours. Stability, so there's really nothing. 1 hour stability as well, nothing. Pound yen. It is bearish, heading to 140, but another 100 pips to the downside. Definitely bearish right there. Nothing, it's free falling. Everything is just dropping. Technically, equities should be the same too now. They should be free falling, but it's not. Nothing. Bearish, look at that. Dang, 2 days. Let's see. Dang it, 3 days, 200 pips. So those are the ones that we're looking for. So, three free falling, CAD in. Free fall as well. 100 pips. Still bearish, bearish. Weekly, bearish. Ooh, okay, the CAD is also good to short CAD Japanese yen, wait for the correction, and then sell. Perhaps I'll wait back down to 80. So 400 pips to the downside. Kiwi Japanese yen. Also bearish, back to 72.50. This is now the floor. Back down to 70. 250 pip drop. Possibly once it breaks through the floor. There's also about 200 pips to the downside. Nothing. Okay. Still based on short. Okay, so that being said, everything is in a short position. Go long the US dollar, dollar CAD, dollar Swiss, but dollar Swiss not doing really anything. Long the yens, okay, but the difference between the dollar and the yen is that the yen is way stronger than the dollar. That means then that the yen will be stronger against the major currencies. So better to wait for price to come back. So the plan would be to come back or wait for correction and then short. Okay. That's it. Any questions, queries, challenges?
No.
Awesome. Then if not, enjoy your weekend, guys. We'll see you Monday.
Thank you.
Yeah, thank you guys.
Thank you. Bye.
Bye.